This is how we do it. It's Friday trades, and I'm feeling okay. Checking in on the expirations because it's expiration day. Yes, indeed. Looking for the charts to keep greening up. Maybe they will. I'll be feeling good. You should really rehearse or write some of that. Think about that before you just start singing. Why? Wouldn't be as fun. Wouldn't be as fun. Here we are on an expiration Friday. It is Friday, December 5th, Friday, December 8th, 20 in the 23 on the Mayan calendar, 1:55 p.m., 1 hours and 5 minutes remaining in the trading week. Wanted to check in here with you. A couple of things brewing. Let's see where we at. So we're at 1795 on the portfolio. So about what? $6,000 off all-time high. I was predicting that by the end of today we would be at an all-time high. Still a chance. Hey, there's still a chance. I'm looking over at the big board, seeing that oil is moving in the right direction, and that would be green up. Check in on the before we check in on just a few positions that I have expiring. Let's see what's happened so far. Not much. I bought some GDX. That is a gold miner. Bought 500 shares of GDX for $29.43. Why would you do that? The thesis is still clear. It's painful, but it's clear, and that is gold, oil, silver, all the old school bad boys all going up soon. That is my thesis. It is not investing advice. In fact, maybe the advice would be just do the opposite, like what people do with Jim Cramer. Silver, SLV, bought 500 shares at 21.05, and then Devon Energy, I had 5 put contracts on the board expiring today at 43, which would have been and likely is going to be just fine. But just in case, I went ahead and closed those out for $5. Why not put that collateral back into the interest-bearing settlement account? And then as far as the board is concerned, CSIQ is down today, so the 23 calls are going to expire at full profit. Come on, Elon, get that farm field internet going. 2184, so it's down 1% today. So we'll let those expire at full profit and then come out swinging next week when CSIQ is back in the green. Sell some more calls there. EOG, I've been thinking about this thing all day. Because I'm way down in my whiskey on EOG. I got the 122 puts on the board, and it's currently trading under 119. So you're telling me you're going to intentionally pay over $3 more per share than what you can just buy it from the open market today? I still haven't decided. There's math according to my thesis that says it's no problem. Take them at 122. You've already collected $700 in put premium. You're lining up for, let's see, if we hold through the special dividend and the fixed dividend, we've got 241. Now let's do the math on the abacus on the screen. So we've got $1.50 coming up ex-dividend next week. That's the special dividend on EOG. And then we have a 91-cent dividend coming up middle of January. So if we hold through both, which would be my plan, that would be $2.41 per share times 500 shares. That's $1,205 plus the $700 we've already collected. So, right there, you're at $19.05. And then we're going to be selling calls and share appreciation. So the thesis says EOG is going to go through 130. So we may take it. We may just take these shares at 122, even though I can buy them right now for 118.85. The other plan would be is you try to just move it down the road, trade it out and down, and then I would still buy shares today. So that would be the other part of the idea. Because if we tried to roll it, how far out do we have to go to bring it down to, say, to 120 and not have to pay money? So let's go out. Will 28 days do it? 28 days. So we have to collect 315. So 28 days would get us down. It would almost get us to 119. 119. It's definitely some math that could easily be done. Now, you would forego that first special dividend, but you would also, roll down from 122 to 119. That's $3 a share on 500 shares is what, $1,500? Pretty good math. But you'd still have to pay what? Another 25, $30. Big deal. Big deal. We'll think about it. We still have an hour. In the meantime. Maybe, just maybe, we can watch EOG move up from the 118.83. We shall see. Otherwise, what is the short-term thesis if I was to try to squeeze some dough out? So say I get these shares that I pay 122 for by the end of business today, and then next week I try to sell calls at that number, then I would protect it if I had to. So say we went to sell call and you're looking at like just doing them weekly, just trying to collect cash, and say it just goes sideways, right? So you'd be at 55 cents on 5 contracts, right? Or 500 shares, 55 times 500. So would you be able to collect 275 a week-ish while you're messing around and collecting dividends? That's part of the plan as well. So I'll run all those math equations so you don't have to be bored with them. GDX 350 puts underwater. I'm going to go ahead and take those. I bought, as you saw, more GDX today for $29.43. I'm going to take these 3050s because there's nice volatility on it right now in the calls. So we'll take those. Coca-Cola, what is it sitting at? Did it dip under 58? No, 58.53. So we're doing well there. Looking for max profit. And wait a minute, was that green? No, that was red. So it's down 0.36%. So we won't roll those today. Pepsi, I know they're downtown to Chinatown. So our 172.50 calls are doing really well, unfortunately. Pepsi currently at 165.75. So we'll wait for those to go green again. SOUN, are they still over $2? He's still over. Yeah, it's at 207. So I decided to let these go away today. Take a few bucks and put them in my pocket, and then we'll come back if it dips back under 2, which it will. It's very volatile. I do see it doubling, maybe quadrupling. So I might easily be wrong, but in the meantime, we're going to roll the dice, take our chances right there, because the next move on SP 500 is going to be down. Well, how can you say that? It's rocking and rolling right now. We'll talk about it in just a minute. ExxonMobil 105 calls. Obviously, those are unfortunately doing just fine. Currently, ExxonMobil trading at 99.60. So not enough meat on the bone to roll those. I'm going to wait for the thesis to play out, and then I'll put my Valeros and Devon and ExxonMobil, Energy Transfer, and Chevron all into play with calls above cost basis, and get the cash machine rolling. That's the thesis. I'm sticking to it. Could oil continue to go down? It could, but I don't think it will. In fact, let's look at it right here and right now. So this is our 1 month, and our original thesis said that this was our local low, and we were wrong. I mean, we are right on, right? All the way up here to 74. It was looking like, hey, that's a good call. But then the rug was pulled out from under us. Sentiment changed because of what OPEC Plus had to say. Even though the words they used, first paragraph would be like, hey, that's what we wanted to hear. But overall, concern with demand going forward in case we roll into a recession. Other parts of the world are in a recession. China's stinking it up right now. But in the meantime, so now we feel we've bottomed here at as low as 64.35-ish we got into, and now currently at 66.62. So today it has played back into our thesis. However, two big numbers we need to see, three big numbers we need to see. One, it needs to be impulsive through 67. So right now it has been impulsive through where we're at this moment, 66, 63. It could easily run up to 67 before the day's over, but it likely won't happen until Monday. But we want to see it run to 67 impulsively, then battle its way up through 70, and then the big green flag will be through 74. So taking out this local high would mean, yes, that was the low. Now the local low is in. Now let's see the 1 up, 2 down, 3 up, 4 down, 5 up, take us up to 80 plus. That's the theory. We're sticking to it, right? Okay, let's take a look at SPX just to get an idea, because what needs to go on from a healthy position is we got what we were looking for. We peaked our head above the 4,600, and that's currently where we're at. We're at 4606.50. Hello. So pretty nice. So this is the 1 month. So now we move this 5, right? We move that 5 up here. Whoop. Where'd it go? We'll move the 5 up here, recount the waves, right? And then we look for what is the pullback. The pullback needs to be corrective in fashion, an ABC. So A down, B up, C down, and then continue back up for us if we want to get all-time highs, which is in the cards. It's in the cards. So how it moves back down, which is, again, we're looking at moving through 45.35 and then tiptoeing right around 4,500, maybe even dipping a little under 4,500 for the next retrace to show us, are we going then even higher, or is this going to be the local high, the hidey-ho? So that, I know that sounds very confusing, and it is, because that's what Elliott wave theory is, confusing. It doesn't predict the market, it just helps with probabilities. In fact, I'm eyeballing CVX, because CVX is Chevron running up over 144 now. And I told myself, if I get even today, even though the thesis would say just hold on, little girl, if it gets to even, I don't know, what do you want to do? I could see you letting it go at 144.50, because we, as you know, unloaded our shares on Friday. We had 800 shares, unloaded all of them at profit. What were the numbers we were selling at last week? What was those numbers? We sold 300 shares at 146.24. That was a great call. And then we had we had a call on the table. We bought the calls closed. And then at the end of business on Friday, we sold the remaining 500 shares at 144.78. And now we came back stronger. We're 1,000 shares in, but our cost basis is down to 142.52. And Chevron currently making a little bit of a run at 144.16. Now you would say, why even do that? Well, it's risk mitigation, right? So if I sell it today at 144.50, I make $2,000 net on top of what we made last week in Chevron to help offset the non-moves that ExxonMobil has been making, right? ExxonMobil has been slow to get off the campus, or the canvas, I should say. And so that is what I wanted to discuss today, what our thoughts are. Gold, silver, both down today. Hopefully it's its final move down. It was looking for a little dip before possibly ripping our faces off with a rocket ride north. So we'll be keeping our eyes peeled there. Twilio, I'm real positive on Twilio. CF Industries also, I almost sold some puts today, but I thought, well, if your thesis is for a little bit of a pullback, a healthy pullback into the beginning and middle of next week on the SPY, maybe you get a better opportunity to sell puts on CF Industries, because I think it's going up to 100. Twilio, the other thing on the radar right now that I think is going to go on a rocket ride according to how the setups are on the charts. And yesterday we sold $65 puts, right? Yeah, yesterday we sold five $65 puts expiring. That can't be right. I think it's 12:15. Why does it say 12:08? No, that's not on the board today. That's next week. Yeah, that's next week. So I got to change that. That's a 12:15. So I like Twilio. Any little dips, because again, I'm right now. This is witchcraft. Some call it a cult. Elliott wave theory. Trying to learn it. As I'm learning it, I think I might become a better investor. It doesn't mean Elliott wave theory works, but in my mind, it does, because there's been a handful of confirmations that said yes, it's helped me with probabilities. So Twilio says they're going to 100 according to what the chart looks like, but on the way up it's going to be 5 waves: 1 up, 2 down, 3 up, 4 down, 5 up. So I'll be looking, instead of owning, which would be a more confident play, because I do have a lot of money on the table right now, and I want to see through the gold, silver, and oil trades before I get into any other big positions. So I thought I'll just sell some Twilio puts on red days. So that's what we did. It's up green today, which makes, let's even look at the Twilio. We got to be 65% into the profit or so. We're 73% into the profit on the Twilio puts. So we got that going for us. So that is the update on this Expiration Friday. Whoa. Checking on our trades. Yeah. And hoping to find, what are we hoping to find? A pile of money. Yes, indeed. So got a nice weekend ahead of us. Very mild weather here in the farm fields of Valparaiso. 55 degrees-ish today, and leaving for Marco Island for a few days early next week. So we'll see. Maybe no videos, maybe some little YouTube shorts to check in on. But I will definitely be taking a look at the Robinhood accounts from the phone. Stacy's made a big move today. What did she do? She sold 10 29.50 GDX puts and collected like well over $800 in a 1 week. No, it was a 2 week trade. Never mind. 2 weeks trade. That was a nice little move. Let's see. She's got Alcoa expiring, and it's a $25 puts, and Alcoa is currently at 25.01. Hello. So we'll take those at 25. We will. She's got Chevron calls expiring at full profit. Hood calls. She wheeled that one, and now she'll be selling off that for a profit, small profit, because Hood did a lot more than I thought it would do. She bought them at like $9 on a wheel trade and is selling them at $9.50. And Hood is currently trading at $11.66. That's just, again, that's the downside of wheeling, is you cap your gains, right? But you create cash flow. ExxonMobil calls expiring, so she'll do nothing with those until Exxon makes a stronger move up. So that's that. Thanks for tuning in. Have a wonderful weekend. Like, subscribe, comment, and I'll see you in the next video.